So Bitcoin is hundreds of dollars away from a critical level on the weekly chart, which we cannot afford to lose. We're going to break down the Bitcoin chart on various different timeframes and look at the key patterns being performed. And I'm going to share with you what I think is going on in the charts. I'm back in my studio, back on my desk, guys. Thank you for putting up with my content whilst I was remote. Hope you guys got the data as and when you needed it, including the key non-farm payroll, which came out yesterday, leading Bitcoin to have a little bit of a wobble as equity markets wobbled. It initially fell very sharply, and then we saw equity markets recover later on Friday, with Bitcoin recovering too. Now, for those who aren't familiar, the non-farm payrolls came in too hot, meaning that the economy is still quite inflated. In other words, jobs market is still really tight, like the Fed has been saying. But remember, we wanted this figure to be like the Goldilocks figure. We wanted it to come just right. We wanted it to fall a little bit, but not too much. If it fell too much, oh no, we're going into recession. If it didn't fall enough, which is what happened, it actually was really high, the market is too hot, therefore inflation is too rampant, therefore the Fed is more likely to rate rates higher and for longer. And we can see when we head over into the Fed rate monitor tool, you can see right here that the pricing has now have a 50% priced in of a 75 basis points. This was virtually nothing. It was basically 95% plus had pricing just a 50 basis points, which was going to be a reduction from the previous 75. So the market has now had to start pricing this in. And don't be surprised if between now and September the 21st, which is the next meeting, you don't see this climb higher and higher as the market prices that in. So yes, the market didn't fall hugely immediately, but that's because the market knows it has all of August and all of September pretty much before the FOMC meeting. So it's going to take its time to price in the 75 basis point rate hike. Now, fear and greed index is sitting at 31. The market's still quite comfortable in this range because we're in this limbo range, and this critical level is going to decide if we're going to start working our way to the upside or if indeed we're going to be ugly back to the downside again. So you can see the US markets ended up pretty much flat, really. No big huge moves here on any of the major indices, but it was a yo-yo day after a blowout jobs report. Okay, so now let's head over to the Bitcoin chart. I'm going to come into this weekly key level because this one's critical, but before that, let's work through the different timescales. And the first thing I want to show you guys is if we switch over to the hourly, I want to share with you what we are seeing here. So on our hourly chart, we are seeing a potential kind of head and shoulders pattern. So I do want to be careful that what we're not seeing is this, because if we get this kind of a head and shoulders pattern, that could suggest a nice bullish move to the upside. Now, if we zoom out, we can see we are indeed still keeping our upward trend. This is good news, right? I remember when I said earlier in the week, we can even come down to this kind of 22 level here, the top of the support level, in order to bounce. And as long as we bounce, create our higher high above the previous high. So the previous high was sitting here at 24,600. It's got to go above that now, right? So we need to see this trend go and do this and post that higher high. Then it can come down, that's fine. It can do something like this. But we need to see that. If we start falling here, that's even okay. But we cannot afford to break this 22,000 level at the top of the channel. That's the really important bit at the top of the channel. Now, why is that important? Well, in order to understand why that is important, let's zoom out to the 4-hourly chart. And you guys will remember for a very long time, we were in this channel. Okay, we were in this channel between the bottom of the channel was at 18,800 and the top of the channel was at 22,000. And you saw we fluctuated up and down in this channel. We got rejected once, twice, thrice in here. And then finally we got the breakout. We hit 24K, we came back down, we tried again, hit 24K, coming back down. That's where we're at right now. So what we don't want to see is this happen, because then you are forming an M pattern, and that could suggest you're going to start heading down to the bottom of your channel, which is back down to those 18,800 levels. And then I don't even want to talk about what happens if you lose the bottom of the channel. We'll come on to that as and when there's evidence that we're heading back into this channel. So that's what we're looking at here. If I bring out the EMA ribbon on the 4-hourly, you can see we've got this key level where throughout this period of time, we've kind of tried to go into our EMA ribbon, get rejected, rose above it, then got thrown back down again, rose above it, got thrown back down again, rose above it. This one looked really powerful, right? This is where everybody got excited. We took some support from our EMA, but we couldn't push back on, right? And we got thrown back down below. Tried again, thrown back down below, tried again. So this is crazy. I mean, this is basically sideways action. We're not able to build any momentum in either direction right here, which makes complete sense because the bulls and bears are fighting for control at this key level. It's in a huge level, which once it's decided is going to decide if we're moving to the downside or if to the upside. And I'm going to show you evidence around that very, very soon. Now, what I do want to show you here is let's head on over to this chart. So on the 4-hourly chart here, you can see what's going on, right? We've got our higher lows. You can see those. We've been talking about those, and we've got our higher highs, with this latest higher high being just about above this high. Great. But what we're noticing is this consolidation pattern every single time. Okay, we get this bullish channel where we fall to the downside and then we break. We fall to the downside and then we break. We fall to the downside and then we break. And now we're getting that same pattern again. So what we want to see is this break with great volume and really go and post that higher high now above this level. That's what it needs to do. It needs to get above that 24,600 level, 24,700 level. Let's peak right here. That's what it needs to do to keep this momentum up. What you don't want to see is it post a lower high like there and then get thrown to the downside. That is what we need to avoid here. Now, the good news is we have got this. This is an upward trend right now. So we are maintaining this parabolic upward trend, but we need to see that next impulse move to the upside in order for this to stay validated. Otherwise, we'll be heading back to 22. If we cannot get the support from 22 at the top of the channel, which I was showing you, the top of this green line here, then we're going to fall back into this channel. We don't want to be falling back into this channel here. Okay. Now, let's switch over to the daily, because we want to look at all the different time frames here. And what I want to show you on the daily is we are clearly forming this upward trend, right? You can see this is an upward trend here. You can see the teal-colored line I've got drawn here, and that's fine, right? We can see that. But what I want to bring out is the Bollinger Band. And let me just get a slightly tidier chart to represent it. Let's bring out the Bollinger Band. And what you can see with the Bollinger Band is we are getting this huge constriction. Now, if you zoom out, or if you know how to use the Bollinger Band, when you get this constriction where the upper bound of the Bollinger Band and the lower band of the Bollinger Band constrict together, that normally indicates you are ready for a big explosive move very shortly. So you can see in this example I shared with you, we constricted, we broke the Bollinger Band to the downside on this candlestick here, and then big impulse move to the downside. Now we're seeing it constrict again. But look how long it's been constricted. This is a lot of pent up impulsion sitting here waiting for a big move in either direction. Now the worrying thing is this constriction is slightly to the upside. It's rising. Now normally when you get a rising channel or broadening rising wedge, you're more likely to fall to the downside, okay? Because you're consolidating upwards before the bears take back control. Now that's a slight issue, but what we need, but it doesn't mean we can't break to the upside. We can. We just need to go post that higher high and work our way to the upside. But if we don't, we could see ourselves falling down to the downside. Also bringing support to why we're seeing such battle around this level. Let me bring out the VP of VR. And this shows you where the supply and demand is. And as you can see, this is a very, very pent up level, right? There's loads of bulls and bears fighting for this level. This is a really important level, which neither wants to give up easily. But you can see, once we do clear these levels, once we do clear 24,000 and then clear even past 24,500 at these levels, look how thinly traded these areas become, right? VPVR has very low areas of trading here, and therefore I think this gap can be filled very quickly with that impulsive move to the upside once we break this key level. But you've got to break this key level. You have to break the wheels of the bear in order to do this, and that's what's going on right now. Is you're having this battle between the bulls and the bears, and they're fighting for it. Despite the economic news, the market wants to move, and the market's made the decision. We want to relief rally. But the bears are just hanging on and trying to push it back down to the downside. And that's what we're seeing, right? Because we had our rate hike, we had our bad jobs figure, right? We've had all these things coming out, all the negative catalysts from last week as well. But the market wants to keep hopium. It says we want to relief rally, and that's what we're seeing right now. And that is why I'm making sure I'm in the market right now. I cannot afford to not be in the market right now, given this situation. Now, if we also look at the point of control, the point of control is sitting at about 20,000, okay? So we can see that sitting at 20,000, just shy of 21,000. Now, this is the key level where the bulls and the bears trade, right? That's where the most volume comes in on that time scale. So we need to keep an eye on that being the point of control, that we don't lose that level as well. And finally, coming on to the weekly, and this is the key level I want you guys to watch. It's very, very important, and most people aren't talking about it. Is if I bring out, let's just head on over to this chart and bring out our 200 moving average, which we've been speaking about a lot. We worked so hard to fight for this, and now look at where we are at now. So remember, this is that key level which we've been monitoring, and you can see just now with 1 day, 13 hours at the time of recording this video left before this weekly candle closes, we are hundreds of dollars away from closing this level back below our 200 week. We do not want to do this, guys. The 200 week moving average sits at 22,897. That's the level right here. And Bitcoin is currently sitting at the time of recording 23,170. We are hundreds of dollars away from getting that close back below our 200-week EMA, 200-week moving average, and that could be disastrous, because what we do not want is this to act like resistance on the weekly timescale. That would be horrible, as if we're getting that acting as resistance. because that is going to stop any of our momentum. So I do want to see this. We've got a day and a half here for the bulls to really close this candle green and just at least stay above this line. That is going to be crucial over the next few hours, and definitely something I'm watching here. We've got a couple of $100 here on Bitcoin, giving us that breathing room in that gap there. But if we close this back below, that is not going to be a great weekly close here for Bitcoin. So there you have it, guys. Interesting market. Lots going on here in the technicals and the fundamentals. Obviously, it's weekend, so be careful if you're trading here on the weekend. But do be careful that you're not procrastinating it. Like I said, I'm all in on this market. And in this video, I explain exactly what my rationale is and why I wouldn't risk being sat on the sidelines, even though there is a risk that lower prices are coming here. Don't forget to smash the likes. Don't forget to subscribe. As always, check out BYBIT and BitGet, links in the description. And I'll see you in the next one.